Hey everybody, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. We're going to check in on the market, starting on the weekly time frames and zooming in from there as the bulls attempt to get bounce, follow through, still battling to defend support. We're going to talk a bit in depth about Tesla and the current setup and situation, and the quantum names, of course. We'll wrap it up with commodities, the metals, and the miners. Let's go. Real quick, we're having a sale on our Swing Report, which is a weekly publication where Chart Guys Lamont every weekend sends out a couple picks where he's using volume profile analysis to have the target entries and the exits. And we did a webinar this past week where we were going over what volume profile is, how he uses it for these setups. So in the comments here, I will link to the webinar as well as the sale so you can see what the Swing Report is all about. All right, so we got some weekly inside bars in the NASDAQ and the S&P 500 as the bulls continue to defend support and we continue to tighten sideways. We had a scenario Friday where pre-market we had a significant amount of weakness, but the bulls did defend support. And I'm finding the clarity on the 12-hour chart. You can see it's really just a standard equilibrium where we've got our base at the low, high of the bounce, higher low, double top, and then a double bottom. And we bounced right off of the low of Tuesday. And if we're going to be looking at support and resistance, as a trader, I love to be as extended as possible into those key zones. So if we're watching this daily support, pre-market, the NASDAQ was dumping. And, the 5-minute RSI is down in the low 20s. The 15-minute RSI was oversold. Doesn't mean we can't break that support, but there's a higher probability that levels are going to hold if we're extended when we get to them. So bulls ended up controlling the morning and having a nice, essentially they saved things because it looked real ugly. It looked like these daily bear flags, which are still on the table, but it looked like, we're about to confirm and roll over after the FOMC reaction. And we really shifted the tone by the end of the day Friday into that quad witching. So it's still anybody's game here in the short term, and we're going to be testing resistance, it looks like, early on this coming week. We've been battling daily EMA 12, and if we can clear this wall, and it's a resistance level at this point from space, and what that means is everybody's looking at the same levels. We've rejected 3 times from them, and if that breaks bull, the weekly bounce will be underway, and we'll zoom out. And then the most important thing will be, what's the bounce retracement size? Is it a weekly weak bounce that's a potential bear flag? Is it a big weekly bounce that's like August 50%, 60% bounce retracement to tighten up before the bull break? That's all. We'll talk about that later because it doesn't matter right now. What matters first is, can we break this inside bar bullish? And the burden is still on bulls because this is essentially a big dump. And now sideways, this is the scales, the supply and demand, and supply is outweighing demand significantly on the drop. And now the scales are doing this and they're balancing out. And we're finding fair value at the moment. And it's just a question of, does the demand start to exceed the supply to get this bounce going or not? And so, the levels are so clear that the bulls have a very clear support zone that they're playing off of and putting stops underneath, and the same for the bears. And I'm favoring the bulls in the short term just because I believe that if we are going to see significant weakness in the market from here, it will need to be a confirmed weekly downtrend. And we got to get a weekly bounce going if we're going to confirm a weekly downtrend. So I do have a little bit of a bull lean. I've exited a good bit of my hedge position into this drop over the last couple of weeks. But that can change very quickly. And so still remaining skeptical of bulls. I have a bull lean, but prove it. Break that resistance or we're not going anywhere. And we look at the S&P 500, it's pretty much the exact same story. We did get a bull break here with no follow through. And again, this is why it's important to be watching everything in the market because, you break that resistance, new bounce highs, and you might get faked out if you're looking at just the S&P 500, but knowing that the NASDAQ rejected kept you from getting overly bullish on that S&P 500 break. But same deal, we dropped down Friday morning, we held the low of this drop, and the tightening of the 12-hour continues. Another thing I'm watching with regards to the NASDAQ is MAGS, MAGS, which is the ETF for the Magnificent Seven. And a lot of the bounce attempt from these lows, the Magnificent Seven have not been leading. And look at this resistance zone. Looks like after hours, we got a bit of a push up. I don't really care about that after hours action with no volume behind it, but clear resistance zone, clear support zone. It's just a double top and a double bottom. And we're just waiting which is going to break. And bulls do want to see the Magnificent Seven leading, in my opinion, leading the NASDAQ, because that gives confidence and we can get good follow through if that's the case. If the NASDAQ breaks resistance and this is not breaking resistance, I'm still a little skeptical. I need to have all systems go and affirming, yep, Magnificent Seven leading. I mean, watching all these names like Amazon, clear 4-hour, lower highs on this drop. Google trying for the inverse head and shoulders on the 4-hour. Meta has had a lot of good volatility, but again, same thing. Got to get over these lower highs here. And you can see the relative weakness where these names did drop to lower lows when the NASDAQ did not. So need to see these names as essentially leading the charge, in my opinion. You want to see them as captain a team bull if the NASDAQ's going to break this resistance. Semiconductors. So the weekly bounce is already underway, and we know anything under 259.63 is a weekly lower high. So it's a fairly weak bounce at this point, but it's all relative because this is a stronger bounce than the NASDAQ at this point. We had more follow through, and essentially we did double top at this bounce high on SMH. And same thing, if the NASDAQ's going to break resistance, semiconductors need to be breaking resistance as well if it's going to be all systems go. NVDA sideways here, holding its current low of consolidation, and just trying to shape up a daily uptrend where we see a significant bounce. There's a little higher low, but we've got to break 122.89 to confirm the daily uptrend. We have been seeing a little bit of rotation in the semiconductors where names like AMD, little bit stronger. MU had earnings, and it was a bearish earnings reaction after initially being bullish. Initial bullish reaction and then a big rollover. And I'm still watching MU because of how beautiful this sideways range is. And you can see it's constricting these lower highs, tightening up. So MU is going to see some weekly volatility here pick up in April. Expecting this break is going to happen in April. So I am keeping an eye. I haven't traded MU once in this tightening range, but I like the clarity of this tightening range. Could it be a descending triangle? Absolutely. And descending triangles are a bearish pattern that generally break bear, but I'm still just very much open to a break in either direction. We're right in the middle of this range. Just something I'm keeping an eye on as we move forward. So Magnificent Seven need to be breaking resistance. The semiconductors need to be breaking resistance if we're going to be looking at the NASDAQ weekly bounce with some confidence. And again, it's a checklist. And if the bulls don't have all of these checks, then we're not as bullish. Tesla. All right, so Tesla, trying to remove my politics from anything to do with trading, which is essential if you're not going to be emotionally acting on things. And my mindset as a contrarian when I look at things is everybody right now is, wins peak bearishness. And I think we're right about there in terms of the headlines and the news and all that and this reaction. In my opinion, it's a way overdone reaction. Again, my opinion doesn't really matter so much. I care about making profits in whatever direction. Tesla's been great for volatility, day trading recently. But I do believe, I look around and I see so many friends on Facebook or whatever just tracking the drop in Tesla, and they're not market people. They would never be talking about the market otherwise. And then you go on Reddit and you see all these emotional, whenever you have inexperienced market participants acting on emotion, the market punishes them. And right now, very clearly, that is the bear side of things. And, some people are saying, well, there's not a lot of, retail shorting Tesla. I mean, if you look around, there are a lot of inexperienced people shorting Tesla. I mean, there are accounts on social media talking about we're going to low double-digit stock price, and you look back and they've never said anything about a company or valuations of a company at any point in their history of their account. And so for me, that gives me a lean to look bull, to at least see a 30% move off the lows to punish these emotional people a little bit. That said, I've traded bearish plenty of times over the last couple of weeks, day trading. But one thing I've been really liking about Tesla is the relative strength or weakness in pre-market following through. It was glaring on Friday. Friday pre-market, it was glaring that there was relative strength to the NASDAQ. And how was it glaring? Just compare the two. I was just looking at the two trading, and I had a bull lean on Tesla for Friday because of that setup. And the way that I approach day trading is, I want to identify relative strength and weakness in pre-market, And then I want to ideally have an edge in terms of what I feel is the most likely scenario for the indices. And so the fact that the NASDAQ is heading down to short-term daily support with 5 and 15-minute oversold into the open, my mindset is, okay, we can easily see a 15-minute bounce on the morning. Even if the bears are going to control the day, we can get a 15-minute bounce, cool off shorter-term RSIs. Even if we do get another leg down, I'm looking for a 15-minute bounce on the morning. And if that's my bias on the indices, I want to find something that has relative strength to look long on the morning. And so you see from 8:10 a.m. to open, the NASDAQ is dumping. And yes, Tesla was impacted by that, but not nearly as significantly. Look at the low of pre-market on the NASDAQ and how much follow through we got. Whereas the low of pre-market on Tesla, we didn't break it. We double bottomed there. And then the bell rings and you shoot straight up and you break that high of Thursday first thing to give that confidence. It was just an inside bar bull break, and that happened at 238. And we very quickly followed through, 2% over that level right out of the gate. So I loved that bull setup for Tesla on the morning. Put out a video Friday morning where I said I'm looking long QBTS and Tesla. We'll talk about QBTS in just a bit, but again, it was that relative strength. So if you are looking at day trades, I highly suggest looking at where there is relative strength or weakness pre-market. Sometimes I don't have any conviction on the direction that the indices are going to go in the first 30, 60 minutes of the trading day. And then I don't have to trade the first 30, 60 minutes if I don't have that conviction. But when I have a lean one way or the other, I then look for the individual names that favor that direction. So we have a very key resistance test on Tesla first thing this coming week. We've double topped at the 250s, so 250 to 253, including extended hours. That's the high of the bounce at this point, and we're going to test it first thing next week. And again, it's a weekly inside bar. If it breaks bull, we will eventually look for a weekly lower high, but can be very worthwhile before that weekly lower high is set. So I've got a bit of a swing trade bull bias in Tesla, and I'm also shorting it as well. I longed it on the morning on Friday, and I shorted it. I forget exactly at what point, but shorted it at some point. Essentially, when I have a swing position long, it makes me more aggressive shorting to offset it. If I've got a long, let's just say I got 500 shares long in an IRA for a swing position, and I'll look at a spot and say, okay, nice big bull move. I'm not going to sell my swing position because this is not the daily move that I'm looking for. This is a short-term move, but we're really extended. It's a really nice morning. I'm going to short 500 shares in my day trade account and try and position where I have a low risk short on. And so I did that in the sense where I grab, 500 shares, we drop a bit, I sell 100 of them, and then I just stick a stop over the high of the day. And if we break to a new high of the day, then I'll lose maybe a tiny bit on this short day trade, and the swing trade continues to benefit. And so we had a nice 15-minute equilibrium tightening up, and then a bull break into the afternoon, stop out the short, long continues to benefit. And that's one of the ways that I essentially am able to let swing trades play out longer. If I normally, I would be selling my swing position and then trying to reload it in 15-minute consolidation. And too many times the move will run away from me when I do that thing, just over trading because I'm a day trader. So I will essentially do these things in two different accounts to allow the longer term mindset of the trade to play out. So that's been my approach. But again, just prove it, bulls, break resistance. A lot of space for an hourly high or low. We got a little support level at 244.52. Ideally, bulls hold that level Monday morning, but got to break the 250s. And if we do, the next resistance level that we're going to be looking at, just these little levels on the way down, pretty much the high of every day, 266.25, 272.65, 279.55. So again, I've been loving the volatility in both directions for day trading. Let's see if the weekly bounce can get going after that strong close Friday. Financial sector. So if the indices are going to roll over for another leg down, I know what it will look like. It would look like a head and shoulders on XLF and XLV. They have a possible setup for it. We bounced off of XLF weekly support. XLF is leading the bounce in terms of the major sectors. Stair step up, broke it on Friday, but trying for a daily high or low. But if we're going to weaken, this would confirm a weekly downtrend and a right shoulder And that would be the first, when has XLF confirmed a weekly downtrend last? And your answer is, it has not happened since the end of 2023. So that is almost a year and a half now of no confirmed weekly downtrend. So if we confirm a weekly downtrend, we could say something is significantly shifting for the first time in a year and a half. So that is very important to me, whether that happens or not. XLV, as I mentioned, also is a potential head and shoulders on the 2-day time frame. You can see on the 2-day chart here, again, if we're going to roll over to lower lows, these two major sectors will confirm head and shoulders. If we do not break these supports, it's essentially a double bottom on both. If we do not break them, again, I'm just looking for information every day. Is this NASDAQ bigger picture drop and S&P 500, but NASDAQ matters a bit more to me. Is it August, where we're going to see a significant 50% plus bounce retracement and then recover? Or is it 2022, where we confirm a weekly downtrend and we're then in a bear market for the next 10 months or whatever it was? And so that means the next 3 weeks, 4 weeks for me are very important in terms of which of those two is going to shape up. Do we confirm these weekly downtrends, or do we see solid enough bounce retracement to put in that bottom of the fear low for a prolonged period of time? And so step one is get the weekly bounces going, which the bulls have not done yet, but we're looking for that to try and happen this coming week. Burden on bulls. All right, onto the quantum names, and their volatility has returned. Again, great trading, both directions. QBTS has been the lead bull. We had a run up into an NVDA quantum conference and then a sell the news event very clearly. But NVDA broke to a higher high. Nope. QBTS broke to a higher high when the vast majority of quantum names, a weekly lower high is the most likely scenario. QBT has been all bear. Yes, a big bounce off the lows, 437 up to, that's a 100% bounce there. And again, this is why I always favor longs in markets. Number one, markets go up over time. But number two, just mathematically, if you short that high and you nail that low, you're still not close to the gains of this 2-week, what looks like a dinky bounce. It's just not the same game. And then you have things like short sale restrictions where you drop 10% the prior day. You can't short into the bid the next day. It's not a fair game. The market has these little rules around it that are skewed to favor bulls. So your maximum best case scenario short, you get 84% over 3 months or whatever it is. And then this little dinky bounce outperforms all that work by a lot. But anyways, a weekly lower high is the most likely scenario on names like QUBT, IONQ. We're looking for a weekly lower high. It hasn't even started its weekly bounce. RGTI, tightening up on the weekly. Anything under 1620 is a weekly lower high. So I've got a bear lean on all these other names, but QBTS has been great in both directions. I fumbled a short here where I was trying to play off this low 11 resistance, and they stopped me out right before the big rollover on Thursday. My stop was too tight there. But did get a setup I liked on Friday morning, which is just a gap down when a daily higher low is the most likely scenario. You're testing daily EMA 12. Again, the NASDAQ I was looking for a 15-minute oversold bounce on the NASDAQ to at least try and help the morning move. I tried to market buy first thing, and my market order sat there for a minute and didn't fill, and I got frustrated. But looking at the 1-minute time frame, I got a second chance. So first minute, my order, that's why it didn't fill. It didn't fill for anybody. Look at that volume. Nothing in the first 2 minutes, and then all the orders came in. So I was frustrated that I wasn't getting filled, and the price is going up, 2-3%. I got this little lower wick playing off the low of the day, filled in the 830s, and then we had a nice bounce follow through. And, stopped out of my runner before the next leg up, which didn't last long. But just a nice little day trade. Nothing huge, just your base hit, day maker. See you later. So enjoying the volatility in both directions in quantum names. I've been trading QBTS, but again, just monster move up, 100% plus, big drop down for bears, just nice opportunity in both directions. The key for me as a day trader is when I enter the day, I want to know, is this thing going to have significant volatility? How big's the pie going to be? Is there a 7% range on the day where I can, get half the range of 3% and make my day? Because if the range of the day is 3%, it's way harder for me to get my piece of the pie. So the wider the range of volatility, the more opportunity in either direction there is. And so Tesla and these quantum names, volatility has been great for a day trading perspective. Dollar, weekly bounce is underway. Anything under 107.66 is a weekly lower high. So we're going to keep an eye on this weekly downtrend as our guide. But little short-term relief here. Bulls will have to confirm a daily uptrend. This is a bear flag confirming with zero follow-through, marking a potential bottom for now. Metals pulling back to end the week. Gold just fine overall. Daily stair-step and all-time highs. Hourly oversold on Friday. Solid bounce from hourly oversold. So no red flags there. Silver, it's key for me. So I've been bullish the miners, but silver's got to get over this resistance and get up to decade-plus highs. If we don't, miners aren't going up any further from here. So silver is very important to me. I also have a silver swing position that I'm just walking a stop up on the weekly higher lows at this point. Been in that one for a long time. But bulls got to get over that to keep me confident. We got the nice move on the miners that we were looking for. Not ideally, I'm looking for the upper 40s on GDX ideally, but healthy consolidation here as well. Back burner on the hourly Friday. So I made a play on GDX as well. I added back some swing position. Again, turn on your back burner. Hourly oversold, nice bounce. So I essentially trimmed a little bit into strength of NUGT, and I added it back in JNUG on Friday morning. And I got a nice fill there down near those lows. And I also day traded it. If you're going to give me an hourly back burner, I love when the short-term timeframes are in extremes. So again, same thing. If you're heading towards support, you want things to be as extreme as possible in the short term to have confidence the support's going to hold. If you're heading to a back burner, you want things as extreme in the short term to have confidence that at least a short-term bounce is going to play out. So the 15-minute RSI was in the teens. The 5-minute RSI was in the teens. And you're hitting first hourly oversold after a daily and weekly breakout. So ended up getting a nice day trade here as well, letting the swing trade play out. And locked in the day trade, I forget at what point, but after the initial move up. And again, it was just 5-minute stair steps as well. 5-minute stair steps down, bull break, that marks the low of the day, move into the end of the day. But just a nice trade example of utilizing those back burners. And again, even if the hourly bounce wasn't going to play out, I was confident that things were so extreme in the short term, I could at least get a 5-minute bounce to position. And so you get that big green 5-minute candle, I sell half the position, I stick my stop under the low of the day, and I'm now risk-free on an hourly oversold bounce attempt. And that's definitely one of my styles, playing bounces, counter momentum. Oil, weekly bounce underway. So holding the base of support here. We know a weekly lower high is the most likely scenario, but good defense by the bulls. Hold it, hold it, hold it, hold it, hold it. Excuse me. Coughing. So we're looking for a weekly lower high. Again, same thing as the indices, which haven't started the weekly bounce yet. But the question is, what's the bounce retracement going to be here? Is it a bear flag? Do we get enough follow through to look for an equilibrium to be the most likely scenario if it's 50% plus bounce retracement? But the bounce is underway. Energy sector, nice move. They stopped me out. This definitely was nice and clear, tightening up. Stopped me out of my long from down here and then recover. I'm not itching to jump back in just because I don't have a ton of clarity. The relative strength comparative to oil was definitely clear here, but it's the kind of thing where I just got to be patient and see if there's another setup that I like. Again, I look at this. Do I regret anything about that trade and stopping out? No, not at all. What do you mean? If you didn't stop out and you kept your position, you'd have more money right now. Yes, but the amount of times where this tightening range breaking bearish will lead to significant further downside is significant. And so again, I just have to protect myself, and I wouldn't do anything differently. Just an example of how my mindset works as a trader. Oftentimes, something will happen where if I didn't do this thing, it would have worked out, but you can't trade like that. Because again, you got to look at the aggregate size of 1,000 examples and talk about it from that, not from one example. And that's why newer traders get in trouble with not putting in a stop loss. Oh, if I didn't put in a stop loss on this trade, it would have worked out. And they stop using stop losses, and then they're a bag holder for 3 years. Natural gas, as I mentioned, I've exited half of my swing at this point. I think it was 75% gains from this weekly inverse head and shoulders. Again, sometimes trading is simple, where you confirm the first weekly uptrend in years, and from that point, the commodity of natural gas goes up 72% in a few months. And that is why I was interested. I was not interested in natural gas for years, but I saw a setup where I said, all right, if I'm ever going to make an attempt, I got to do it here. UNG only went up 57% from that level, but still very worthwhile. And again, I got the right shoulder into the pullback to have better risk reward. But I'm cautious of a monthly top being set and monthly consolidation shaping up, which certainly looks like it's the case. Weekly consolidation underway. A lot of space for a weekly high or low, anything above 1586. But again, I always like to sell some into strength, because by the time you get a shift on the longer term time frames, you could be 20%, 30% off those highs. So I'd rather leave money on the table selling into strength on the way up than miss my selling opportunity and give back 30% of the gains. With regards to the remaining half position, I've got a tight leash on it, and I'll cut it pretty quick here. Because again, I'm not going to sit through monthly consolidation. Essentially, the bulls this coming week need to show me this is a confirmed daily downtrend with no follow through if I'm going to keep sticking around here. But maybe I'll use this level as a stop for the remaining half. Probably that's the case, yeah. I'll just put a 19.99 stop on UNG for the second half after entering in the 12s or 13s. See how it goes. All right. That's what we're looking at into next week. Appreciate you watching. Do good things. Thanks for the likes and the shares. Check out the webinar with Lamont and the swing report. And I hope you have a great rest of your weekend. It's potato planting day. I've got 3 varieties. Purple Viking, Russet Burbank, and Carla Rosa. I'm going to plant them in these 2 beds. Potatoes usually do well. They don't require a whole bunch of work. And they store for a while. Best tree in the yard, tulip poplar.